Good evening, everybody. It is November 3rd, 2022. It is a Thursday night here in Miami, Florida. It's about 8:43 p.m. Eastern Time. There's lots to talk about. It was a very, very busy week on Wall Street. We got some key manufacturing data out. Obviously, the Institute for Supply Management released their manufacturing PMI coming in at 50.2%. Now, this is yet again another month of deceleration in PMIs. As we've been talking about, it's almost as if the trajectory of those PMIs are more important than the actual number. And we see just month over month of steep deceleration, which essentially signals that the manufacturing sector of the U.S. economy is not doing too good. So it registered about 0.7 percentage points lower than last month. We had a 50.9% reading in September. The figure indicates expansion in the overall economy for the 29th month in a row after a contraction in April and May of 2020. But as we've been talking about, obviously a reading over 50 signals expansion, or a reading under 50 signals contraction. But that is not the right way to look at it. We want to look at the trajectory of those numbers, and we've been seeing steep deceleration ever since. Yesterday, we heard from the Federal Reserve. We heard from Fed Chairman Jerome Powell as they approved the fourth consecutive 75 basis point rate hike. Now, there was a lot of interesting things going on during the Fed meeting, which we're going to talk about today. The markets did not like it at all. Pretty much can sign off and forget about a soft pivot, although Fed Chairman Jerome Powell did signal that the next Fed meeting in December, there is a possibility for a 50 basis point rate hike, as opposed to the consensus of 75 basis point rate hike. However, he did mention that they may need to increase the trajectory, or the duration, I should say, of interest rate hikes well into 2023, and even increase the forecast to next year. So we can pretty much bet that we'll be in an environment of high interest rates. So long gone are the days of ZIRP, which is zero interest rate policy, and I think a lot of companies are going to have to come to terms with that. I think a lot of consumers are going to need to come to terms with that, especially first-time home buyers in the housing market. We're going to talk about that as well. But the last thing I'll say, and then we'll get started on the stream, is tomorrow's a very big day too. You're going to hear from the non-farm payrolls. So tomorrow, November 4th, 2022, the Labor Department will release its non-farm payrolls for October. Expectations are for a gain of around 205,000. Now, the unemployment rate stands at 3.5%. And if we think back to last month, which is the last time we heard from, last time we got the non-farm payroll numbers, we actually had that unemployment rate coming down. And I think that is one of the things that the Federal Reserve is going to be looking at to say that, look, the labor market is very, very hot. It's running white hot, actually. And in order for us to even consider a pivot, to even start to talk about the idea of maybe even lowering interest rates, we're going to really need to see that unemployment rate tick higher. And from the last non-farm payroll report, we saw the exact opposite. We saw the unemployment rate dropping from 3.7% now to 3.5%. Curious to see what it's going to do tomorrow. But without further ado, let's see who we have in the chat. I see Delia Kelly is here. Aspillion says, good evening, Tom. Thank you for joining. We are outside of the 200 Southeast Financial Center here in downtown Miami. Hopefully you all are well. Barry Bell is here, says good evening. Dusty Cole says, hey, Tomcat and everybody. Yeah, there's going to be a lot of wind noise tonight, unfortunately. I do apologize for that. It's very, very windy. It's probably like 25 to 30 mile an hour winds. So I think we're just going to have to deal with that tonight. Let me know if it's any better. We'll try to walk more into the city to see if that fixes things. Rocket is here, says, how's it going? Good to see you, Rocket. Sally is here, says hello. Stephen Bates says, good sound now. Okay. Yeah, it's a little windy here in downtown Miami. Now, it was a beautiful day all day today, but the wind has picked up significantly. Let's see who else we have. Julia M, good to see you. Wendy England. One second. MSK is here. Good to see you. Steph UH. Tariq Khan says it was a sound issue before. Maybe it was just the wind. Yeah. You know, I'm going to have to figure out what I'm going to do about that, because usually as we head into the winter months in Miami, it gets very, very windy here for whatever reason. We'll figure it out just as long as we're good now. 61 says, hey, Tom, happy Thursday. Welcome back to the Magic City. Thank you so much. I appreciate it. Yeah, we're going to be walking around downtown Miami today. We are going to also be heading over to Brickell. Zozo Bob, what's up? Good to see you. Ryan Royal. Harry Connor says, are you going to pay $8 for Twitter? So I think it's an interesting question, right? Now, here's sort of my... I guess we'll talk about Twitter first. So here's sort of my problem with that. And I think it violates a golden rule. Now, for anybody who's been following Twitter as a company, and also Snapchat, I would say too, I would say the two biggest issues with those companies is they have a very, very, very hard time, or they've done a horrible, horrible time with monetizing the platform, right? Really, really egregious. So I think what Elon Musk is trying to do is figure out a way to monetize. But here's the issue, and this is sort of what I call the golden rule. If you have something that has already been for free, right? So Twitter, you know, any sort of social media platform or network that's free, anytime you try to, I would even call it renege on your offer and start to charge people, I think that's a really bad look, in my view. This is the Whole Foods here in downtown Miami. Now, I will say this, though. I think a lot of the news about, you know, Twitter charging $8 a month, a lot of it is fake news. Now, obviously, Now, obviously, it's not that if you want to use Twitter, you have to pay $8 a month, right? That's not what it is. It's if you want a verification badge and also some added features. And I think those added features are as follows. I also think that you'll get priority in the replies. So for example, if somebody, posts a tweet, if you pay the $8 a month and get your verification badge, your reply to that tweet will get boosted to the top. Now, I don't know how many people are gonna wanna pay for that. I think if you had to ask me, you say, Tom, would you pay the $8 for the Twitter verification badge? I don't know, I'd probably say no. I mean, maybe I would have to do a little bit of a deeper dive into what the added benefits would be, but look, I think it's very early on, and I'm just sort of browsing past some of the chats here, and everybody's saying, yeah, I wouldn't pay it, I wouldn't pay $8 for it, and I totally understand that. Elon Musk just took over this company a couple days ago, right? So I think the good news is, right, not to focus too much on the negatives, the good news is he seems to be talking amongst regular average people to see what they want. Right now, not all of your ideas are going to be good ideas. Not all your ideas are going to be bad. But it seems like this one may be a bad idea. And it has caused a lot of controversy on the platform. I don't know, but what do you guys think about that? Michelle K says, hey, Tom, so happy you're back in Miami. Thank you, Michelle. So we are standing here right outside the Aston Martin building, which is almost completed. I'll take you guys down here. Hey, Kathy Lyons says, good evening, Tom. How is your day? Good evening, everybody. Thank you for being here. My day was pretty good. Now, I will say this. I'm adjusting to the temperature change, but in a good way. It was hot, 80 degrees, sunny, bright sunshine. So feeling good. I feel like I have a lot more energy, actually. Gregory's here, says, good evening, good to see you. Quek12 says, they will end up paying once these famous people feel less important. Yeah, and it's sort of strange, the dichotomy of this, right? Now, something as simple as a Twitter verification badge has turned into almost a political argument, which is a little bizarre. But look, I think, I love Twitter as a platform, but I think it's just all about how you use it. So I spend the majority of my time on FinTwit, as they call it, or financial Twitter. So this is going to be the lobby of the Aston Martin building. Now, here's the interesting thing. It's not even completed yet, and I think the building's already sold out. So check out how tall it is. And I think almost the entire building is sold out. I think about, I want to say over 90% of the units are sold out. Now, speaking of super mega tall skyscrapers, I believe about a week ago, and I think if Zozo Bob is in the chat, maybe you could chime in. There's another super tall that actually just broke ground last week. And I believe it is called the Waldorf Astoria building. It is going to be over 1,000 feet tall. And I think they sold out about 80% of all the units. And they didn't even, they broke ground last week. So that's going to be insane to sort of see how the Miami skyline evolves over time. Hey, Billy says, hey, anyone know of any good free coding boot camps or apps that you can learn coding? Yeah, so I do. One of them is called codeacademy.com. So if you go to codeacademy.com, very, very good free resources there. And even if you want to spend a couple bucks, they have coding courses, Python courses for like 20, 30 bucks that are really good. So if you're a newbie, you want to learn how to code, there's tons of free resources online. But codeacademy.com is a pretty good one. Also, a lot of the Udemy classes. The ABX girl is here. Says, read the Twitter layoffs will start tomorrow. Yeah, so the ABX girl, I want to ask you guys about that, right? Because I think there's a lot of maybe misinformation starting here. But before we get to that, so check out the very front of the Aston Martin building. Look at how tall this thing is. You know, for some reason in Miami, the skyscrapers look taller than in New York. And the reason is, in my view, is because Miami is literally below sea level. So it's almost as if the skyscrapers look a bit strange almost. I don't even know how to explain it. But so, okay, back to Twitter, because this is important, right? And I think it goes right along with our topic, because tomorrow is when we get the non-farm payroll numbers, okay? And in the non-farm payroll numbers, one of the main things that Fed Chairman Jerome Powell is going to be looking at, and the Fed in general, ooh, check out this boat that's pulling off. Looks like a fishing boat. One of the main things that the Fed is going to be looking at once those non-farm payrolls are released tomorrow, we'll talk about that on the stream tomorrow night, is the unemployment rate, right? And last month, when we got the non-farm payrolls out, the unemployment rate actually went down, right, from 3.7% to 3.5%. But there's a ton of rumors circulating, and many of them actually are true, of massive layoffs. So Amazon actually just announced a full-on hiring freeze. Stripe came out and announced that they are going to lay off a significant portion of their workforce. And to your point, the ABX girl, Twitter, allegedly there's a rumor circulating that Elon Musk is going to lay off something like 50% of the workforce. Now, I'm not sure if that's true or not, right? I don't think we have gotten any sort of solid information from Twitter. A lot of the articles that I've been reading on the Wall Street Journal and the like in relation to these layoffs, they always say people familiar with the matter, right? People familiar with the matter say that there's going to be about, 50% of the workforce laid off. Now, it could be true, but I don't know. What do you guys think? And has anybody, or maybe if anybody in the chat even works for Twitter, definitely let us know in the chat. We're overlooking Brickell Key right now, and the only way to get to Brickell Key is by this little causeway, walkway over here. Yeah, Robert says Tom, Lyft laid off 13% of their workforce today. I saw that too. So I think the biggest news in terms of the job market today was Lyft laying off about 15% of their workforce. Stripe is also going to go through some layoffs. And Amazon announcing a total hiring freeze. Aaron says, Tom, if Amazon is laying off, it's definitely the end of the world. So I don't think usually what happens, you guys know the progression. A company will announce a hiring freeze, and then they'll start with layoffs. But I think people need to start to think about Amazon in two very different ways. Now, number one, Amazon is actually going to be ramping up hiring into the holiday season in their warehouses and their drivers, right, for obvious reasons. But when you talk about corporate, right, let's say if you work for Amazon AWS, you work in, like a desk job at Amazon, I think those jobs are at risk, obviously. And the first thing that happens is they start with a hiring freeze. They did the same thing at Meta, and then they cut those jobs. Textman81 says, day before yesterday, we weren't being told companies couldn't find workers. Now they're layoffs. Yeah, I mean, I guess it's, it's how fast the economy changes. And if we've been paying attention to the Federal Reserve and we sort of have a good understanding of how interest rates impact the business cycle, I think this was very, very predictable to a point. Now, I will say this also. There has been studies done that show that the labor market is still white hot as it relates to a lot of small to medium-sized businesses, but a lot of very high-paying jobs and well-coveted jobs, those are the ones that are sort of, entering the layoff phase here. Check out this big yacht that's coming by. Hey, Andrew's here, says nice view and great news for Lyft. Let the shares burn to $2. Need Lyft drivers strike, says Andrew. Interesting. Raul says, Tom, Wells Fargo, the bank, had about 18,000 loans in its retail origination pipeline in the early weeks of the fourth quarter. That is down as much as 90% from a year earlier. Yeah, and I think you could say the same thing about, pretty much all of these big banks that have a lot of exposure to the housing market or the mortgage market. I believe the last time I checked, which was just before doing this live stream, the average 30-year fixed rate mortgage is 7.32%. I think that's up 17 basis points from the same time last week, right? And it's going to go up even more now that yesterday, Fed Chairman Jerome Powell announced an additional, this is the fourth consecutive 75 basis point rate hike. So I think rates are on a one-way trajectory higher, and I think we're going to have to come to terms with that. Sparks Carnival says Tom, Kathy Wood bought 185,000 Robinhood shares the other day, seemed to pay off. They were up today. Yeah, I mean, I think everybody knows sort of my take on the Kathy Wood, ARC Innovation ETF funds, things like that. Yeah, I think, so we'll touch on that a bit, right? I'll give you guys one more shot of the boat, and then we'll check out this boat from the bridge here. I think you guys are gonna like that view. Kathy Wood's investing strategy works really, really well in an environment of artificially suppressed rates and money printing that seems to be in perpetuity. Now, that strategy doesn't work once you have the polar opposite environment, which is the exact environment we have today, which is interest rates are on a one-way trajectory higher, and the Fed is reducing their balance sheets, so sucking liquidity out of the system. And the reason for this is because when you have interest rates essentially near zero and money is, for a lack of a better term, free, right? Free money, liquidity's flowing, investors are willing to, pay ridiculous multiples of price to earnings and price to sales for all these companies. Well, you can afford to have a single strategy, which is we are going to focus on, I think we can still go here. Companies say, look, we're going to have a strategy. We're only going to focus on revenue growth. I actually don't think we can. I think we got to go around. Companies say we can only focus on revenue growth. And that works fine when interest rates are suppressed. And that's why, if you notice, if you look at Kathy Wood's ARC Innovation ETFs, and she has many of them, right? The vast majority of the companies that make up those ETFs are all money losers. And you'll notice that they're all super innovative, high beta growth stocks, which works great when you have a zero interest rate environment, because these companies could take on cheap debt and valuations get very, very stretched and very crazy. Now, I wrote a piece about this probably about a year ago, saying that once interest rates go up, those high beta growth stocks that do not have any earnings are the first ones that are going to get hammered, right? Those are the first ones where valuations are going to come down. You're going to have PE compression. And I think that's what we're seeing. Now, think about this last year, right? Think about the particular stocks that outperformed the market this year. You think about the energy sector, a lot of the oil companies. We just talked about ExxonMobil. Marathon Petroleum reported another great quarter. And these are companies that have a ridiculous amount of earnings right now. So investors dump these very high speculative tech stocks that have earnings priced in the future, because as rates go up, the present value of their future earnings decline rather rapidly. So we're standing outside the JW Marriott here in downtown Miami. Also the Epic Hotel and Residences. Maybe I'll show you guys behind here just so you can see. Hey, the ABX girl says, I just got a news flash. Twitter sent an email to all 7,500 employees. Wow, the layoffs will be tomorrow. That's insane. Yeah, I mean, at first I didn't know what to believe because there wasn't an official statement from Twitter, but I guess if they just sent out a notice, yikes. that's rough. Now, you never want to see anybody losing their job. I think that's pretty obvious. But at the end of the day, does anybody really think that, you know, Elon Musk was going to come in here and buy Twitter and not make any radical or drastic changes, especially if he overpaid for the company? I don't know. I think it's expected, right? So again, you never want to see people getting laid off. You never want to see people losing their jobs. But at the end of the day, I think these layoffs may be necessary if he wants to actually achieve what he wants to achieve, which is make Twitter a better social media platform and achieve profitability in the future. So, but definitely is not good. We need to show compassion for those people who were laid off. It's not like we're sociopaths. So this is Brickell Key, another beautiful view here. Hey, Joe is here, says, what is that building under construction? So right here is the Aston Martin building. But here's the interesting thing about this. They're actually going to extend the Riverwalk all the way to here, right? So you're going to be able to walk all the way from where we just were, along the water, and all the way down here, under the bridge. But I think it just may take some time. Hey, Simjib is here, says, hey Tom, good to see you, Simjib. Trust you're well. You know, the Epic Hotel always has really, really nice vehicles outside. I think this is what, a Ferrari? And then this is Rolls Royce here. Austin City Limits, good to see you, my friend. Yeah, Robert says, I think he overpaid big time. I think so too. I think so too. Now, an interesting thing, and I think we covered this before, we talked about it. Now, Carl Icahn, which is a billionaire investor, he's very, very famous for being a corporate raider. Now, he knew that Elon Musk overpaid for this company, and during the time that Elon was trying to get out of the deal, he made a pretty big bet, essentially saying that there's no way Elon Musk is going to be able to get out of the deal, and that he's going to be forced to acquire and buy Twitter at the originally negotiated price. So what happened is when Twitter stock dropped, and I think it dropped quite a bit, I think it declined like 35% or so, maybe even more, off the news that Elon was trying to get out of the deal. Well, Carl Icahn actually went and scooped up a bunch of stock, I think in the 30s, which is a little bit of merger arbitrage there, so great trade. I think he made about $500 million on the trade. And so once Elon Musk said, look, probably not gonna be able to get out of the deal, we're gonna now go forward with acquiring Twitter at the originally negotiated price, well, the stock went all the way right back to where it was a couple weeks ago, and he made $500 million. Not a bad trade. Amar says, hey Tom, glad you're well, and the streams has resumed. Missed the last couple of nights. Yeah, so we weren't streaming on Tuesday or Wednesday, mainly because I had to do some work here and I was traveling, but it's definitely good to be back here in Miami. Thank you so much for the warm welcome back. I see Cindy Foley, this is a beautiful night. Good to see you, Cindy. Welcome. Yeah, Sparks Carnival, I saw that. So Rolls Royce is coming out with their own EV. So there's a couple things I want to cover today. The RT440 says, don't worry, Tom, Elon will make up the $44 billion lost by charging people $8 per month for the blue check. Yeah, we sort of talked about that, and I think that I don't think I would ever pay $8 a month. Now, just to sort of quickly review. Wow, look at these boats. These things are insane, man. Just to quickly review, I don't think he's trying to charge everybody $8 a month, only if you want to keep your blue check mark. And supposedly there's going to be some, I guess, benefits to that, which is you could post longer form video content, and your, what's it called, the replies will automatically go to the top.
but I'm not so sure if that's worth $8. So here's my golden rule, and I sort of told the group this before, maybe 15 minutes ago, but I'll say it again. This is my golden rule. If you set a precedent that something is already free and people are used to it being free already, you can't start to charge for it, if that makes sense. It almost never works, and it's gonna rub a lot of people the wrong way. Now, here's the good news. Here's the good news. It seems as if Elon Musk is throwing out ideas, right? And I think that's his job, is, you know, idea generation. Not every idea is gonna be a great idea, but at least he's asking for feedback for people and not just going to a board of directors, not just going to the bankers that help fund the deal. He's actually asking the audience, which is something I could appreciate. Not every idea is going to be good, right? I think this idea is terrible, like many of you think. But look, that's how it starts, right? Julia M says he's trying to make it work. Yeah, so this is what I call it, and this is sort of the last thing I'll say on Twitter. I think we are now in what's called the fog of war phase, where the deal went through. I'll just quickly show you guys the W Hotel. This is one of my favorite apartment buildings. So it's half of it is a hotel and half of it is residences. Amazing views, by the way. Amazing views. And supposedly this is a very, very good restaurant here too. So here's the last thing I'll say about Twitter. I think right now we are what's called the fog of war phase, where this deal was going to be controversial from the get-go, right? It was going to become a political nightmare and a political mess. And a lot of that narrative is going to last for probably about 2 to 3 weeks. And then you're going to start to see things die down and you're going to get some real material progress here. But for the first 2 weeks of this deal going through, it's going to be Elon Musk saying nasty things, or I wouldn't say nasty things, but fighting with, you know, politicians and people on the platform. And, you know, people are going to be like, oh, you know, trying to do, you know, gotchas and things like that. And you really don't want to waste your energy on that. At least I don't. So I've actually been muting some of these keywords here. You guys know I do that all the time. And in about 3 weeks, this is all going to die down and real progress is going to be made on the platform. But if I could give a piece of advice that's worked really well for me, maybe as like a productivity hack, don't bite the hook, okay? Don't bite the hook. And what I mean by that is, don't get caught up in the political nonsense of the deal, because it's just gonna waste your time. If you spend all your time on Twitter reading Elon Musk's replies to AOC and AOC's replies to this, and, you know, Biden's reply to that, or, you know, whatever the Republican flavor of the month is going to be, it's just going to suck your time, and you're not going to be productive, and you're not going to do anything about it anyway. So I would just sort of let it settle. But again, that's just my opinion. That's my view. So don't bite the hook. Maybe we'll make that a Walks on Wall Street slogan. Can we do that? Don't bite the hook. Anyway, you guys don't want to hear me ramble. More importantly, everybody, tomorrow's a big day. It's a big day tomorrow. November 4th, 2022, Friday. The Labor Department will release its non-farm payrolls for October. Expectations are for a gain of 205,000 jobs. However, the unemployment rate right now sits at about 3.5%. Now, here's one of the main reasons why I think this is so critical and important, and I'll tell you why right now. Well, what happened yesterday? We heard from Federal Reserve Chairman Jerome Powell himself, and they went ahead and approved the fourth consecutive 75 basis point rate hike, which brings the Fed funds rate to a range of about 3.75% to 4%, so right on target. Now, Fed Chair Jerome Powell did signal, okay, for all of those pivoters out there that are hoping and praying for pivoting, this is what he did signal. I think this is Oh, it's Miami Beach Ferry. Interesting. There used to be like a big fishing boat where people would come on here. But yeah, I guess this is the ferry. Anybody taking the ferry here? Anyway, so Fed Chairman Jerome Powell did signal that there is a possibility at the December meeting, there could potentially be a 50 basis point rate hike, right? Which initially sent the markets higher on that particular day. However, if you really, really listen to what Fed Chairman Jerome Powell said, he said that the projections that we gave for the Fed funds rate for 2023 may not be enough, and we may need to leave interest rates elevated for longer periods of time. So you could think about this one of two ways. You could think about this and say, okay, well, they're going to slow the pace of interest rate increases, but at the end of the day, they're going to get to their target that they want to get to, which I think is a little bit above 5, maybe 5.5% by spring of 2023. They're going to get there one way or the other. It doesn't matter if they get there today, tomorrow, or in the spring, right? It doesn't matter if they do it in increments of 75 basis points or 50 basis points. Rates are going up, okay? And that is stock market negative, especially in this environment where we're just coming off the back of unprecedented economic stimulus. And when some of these tech companies that are down 30, 40, 50% on a price to earnings and price to sales basis, they're still pretty expensive at these prices, although prices have come down about 50%. So I would say the people who were wanting a pivot, I think you got the polar opposite, and I do not think it's wise to interpret a 50 basis point rate hike maybe in December as a potential pivot, because if you listen to the entire speech, he said it, he must have said it like 1,000 times. If he said it once, he said it 1,000 times. He said that rates will need to stay higher for longer, and longer than we've expected from our initial forecast. I don't know, but what do you guys think about the Fed meeting? If you guys paid attention to it, if you tuned in, what are your thoughts? Do you think that they're going to go full steam ahead with raising rates continuously, or what are your thoughts there? I don't think we've ever seen this sign. Hey, Dan Zeng is here. Says, hey, Tom, good to see you in Miami. Much cleaner than New York. It's definitely a lot warmer here. Let's just say that. I think today I woke up, it was about 75 degrees. And then at the warmest part of the day, it was like 85. It was a beautiful, beautiful day. So from here, you could actually see Brickell, which is called like the mini Manhattan. It's a pretty cool area. You have Brickell City Center, you have the WeWork building, KPMG, a lot of cool stuff. But once again here, these two buildings, this is the W Hotel and Tower, one of my favorites. Barry Bell says he did mention the leg in between rate hikes. Raul says they will raise continuously, but they definitely want to calm the markets and work their way up, especially with what's going on in the UK. Yeah, I mean, that's a good point about the UK. That's a very, very good point about the United Kingdom, because, you know, think about what happened about a month ago now. Can't believe it's been about a month ago, but the Bank of England was forced to pivot. Does anybody remember that? We had a huge sell-off in the gilt market over there, right? We call them bonds, they call them gilts, which sent the British pound sterling reeling, for lack of a better word. So the currency started to crater, the bond market started to sell off, gilt yields started to rise uncontrollably, and in order to sustain or stabilize the market, the Bank of England actually had to come in here and pivot. They won't tell you it's called a pivot, but I mean, if you're buying bonds or gilt, excuse me, you know, what do you think that is? To sort of stabilize the market. So it's a good point. This is my favorite view of Brickell City Center. You can see all the buildings. Andrew says full steam ahead, 100% next rate hike. The game is who can crash and collect, says Andrew. Ecom World Soho says, hey Tom, you're getting more daily views than Don Lemon's morning show. Oh my God. That's funny. I appreciate that. Thank you so much. Eric says, I think the main focus was to brace people for pain. He stayed on message from what I saw, says Eric. Yeah, and I mean, look, the communication has been very good, I would say, right, from Fed Chairman Jerome Powell. I mean, what more do you want? I mean, the guy, what much more direction can he give? It's a good point. Adventures, thank you so much for the $5 donation. Says, hey, Tom, what do you think about the shortage rumors related to diesel shortage? So I've been getting that question a lot, and I'm going to answer your question with the question because I really don't know. I haven't really been too well read up on it. Maybe somebody in the chat could help us out. Here's the only thing I know. Supposedly, well, not supposedly, we are draining our strategic petroleum reserves. And the Biden administration had put out a memo, and this is where I had to laugh a little bit. Not to get too political, but the Biden administration put out a memo that says, look, we plan on filling up the strategic petroleum reserves at around $70 a barrel, or was it $77 a barrel? I'll just say 77 just to give him some leeway there. But I think that's very wishful thinking. I mean, as an American, I definitely want that to happen. But I mean, look at the crude oil futures contract today. Where is it trading at? If you look at ticker symbol CL, what's it, like 88 bucks? I don't know. I mean, it's definitely an issue, but I don't know if it's going to be super cataclysmic. Maybe if anybody who works in the industry, or maybe anybody who works in trucking, could maybe give us a little bit of insight into that. Oh, JR, it was 70, or the LT process, it was 77. Raolis is also with the dollar really doing really well. It makes it harder for other countries to invest in developing countries. That's a good point. We'll talk about that in a minute. So Dr. Longus says, yes, could the same thing happen here? So I don't think so, but those are the famous last words, and I'll sort of explain my position, but again, it's sort of just my opinion. But really quick, this is the bridge that will take you from downtown Miami to Brickell. We're not going to walk over this bridge tonight, but we are going to walk back this way, and we're going to go over the drawbridge because I think it's a little bit better view, and I want to show you guys the river walk. So we'll do that. So let's touch on that. So could that potentially happen here, where we have an uncontrolled sell-off in the debt market? Well, I think we've been having an uncontrolled sell-off in the debt market. Anybody know where the 10-year U.S. Treasury yield is trading at right now? I think the 10-year, now does anybody remember back when we were doing our New York stream? I think the 10-year U.S. Treasury on Friday, or that Friday before the weekend, the Halloween weekend, I think we just dipped below 4%. Back into the 3.99 territory. Oh wow, from here you could see the Metro mover coming by, and you could also see the Paramount building in the back. That's a really nice view. But now if you notice, the bond market's starting to sell off again, back above 4% at 4.156. Now, do I think we could have a cataclysmic, uncontrolled sell-off in the debt market, sort of like what we saw in the UK? Maybe, but I don't think so, because we have the world's reserve currency, right? The dollar is very, very strong. The problem that happened in the UK is, the pound sterling started to sell off uncontrollably too. And if you look at the Dixie or the dollar index, looks like there's a cargo ship going under this drawbridge. I don't think we've ever seen that before on the stream, have we? Like these sort of box boats? I don't think we've ever seen this drawbridge go up on the stream. I didn't even know that one went up. Anyway. Now, if you look at the Dixie, which is the dollar index, which essentially tracks the relative strength of the US dollar against a basket of other currencies. Now, last week, we briefly broke below the 50-day moving average on the Dixie. Now, the dollar wrecking ball, as I like to call it, is now back in gear, breaking back above the 50-day moving average. And I think the Dixie's at 112 again, which is near 52-week highs. So long as the dollar is very, very strong, I don't think we're going to have those problems. But that's just my opinion. Hey, Charles Diaz here. It's a peaceful evening in Miami. It's a beautiful evening here. I mean, the weather is absolutely picture perfect. Now, you're looking at a snapshot of City National Bank or Miami Tower. Really, really unique glow. As we walk across the bridge, you guys will be able to see a better view. Now, the interesting thing is the Aston Martin building that we were just talking about. So if you rewind the stream about, I don't know, maybe 15 minutes, supposedly the entire building is going to glow the same color as the Miami Tower, which is going to be insane if that actually happens. Hey, Natalie's here. What's up? Says hello, Tom and team. Hope everybody's having a wonderful Thursday, although I thought it was Wednesday. Yeah, I guess happy Friday Eve. Can't believe it's already the end of the week, but good to see you. Thank you, Natalie. Gene says, here is a thumbs up for you, Tom. Sir, from me. Thank you. Appreciate it. Hope you're having a good one. GX72. Welcome, welcome. Charles D says the stock market will react to the election outcomes after November 8th. Let's hope for better days. Yeah, I mean, that's interesting too. I see Sabrina Fair in the chat. Good to see you, Sabrina. So here in the United States, we are going into midterm elections. And I think, what is that, Tuesday? Election day, what, November 8th? What day is it today? Oh man, I don't even know. Anyway, I think you're right. Now here's the good news. And we sort of reviewed this, but I think it's appropriate to review it again because we have elections coming up. So, historically, the market tends to be very, very negative leading up to the midterms, right? That's just based in fact. Now, we could debate all day long about why that is. We could say, well, the market doesn't like uncertainty, right? Leading up to the midterms, you don't know who's going to take control of the House. You don't know who's going to take control of the Senate. So the market or people with money, they're looking to invest their capital. Now, as a capital allocator, the last thing you want to do is invest into a specific industry and then the next day after midterms, you could have a specific party being in control of the House or the Senate. And if they're really, really harsh on new laws, new rules and regulations in the specific industry you just invested in, well, it's not a good look for you. So the theory there is once midterms roll around, and regardless of the outcome, you sort of have a better roadmap for you to invest your capital. At least you have some clarity. Now nobody really has any clarity. So I will say this, and let's try not to get political in the chat. So this is data coming out of Fundstrat. So Thomas Lee, CNBC contributor. I think he's a great guy, by the way. A lot of people give him a lot of crap. However, I will say this. If you are making economic predictions or economic forecasts or even stock picks in the public eye or the public domain, you're always going to get nonsense, let's say. I can't swear on the channel. And the best investors, right, the best investors of all time are only right about 40% of the time. Like, think about that. So you talk about Stanley Druckenmiller, you talk about Paul Tudor Jones, Ray Dalio. These people are only right about 40% of the time, and that's the best, okay? So I know it's easy for people to throw stones at the CNBC commentators, but at the end of the day, it's more about risk management. And just keep that in mind that the greatest to ever do it are only right about 40% of the time. Anyway, so with that said, we have some data coming out of Fundstrat that says if you have a Democrat in office as a president, which we do, Joe Biden, and you have Republican control of the House and the Senate, the stock market tends to perform the best it has ever done in that specific circumstance. And if the red waivers, I'll just say the red waivers, let's say if we have a huge sweeping outturn, people vote Republican, this could potentially be the best scenario for the stock market because we have a Democrat as a president, which is President Joe Biden, and then we would have full Republican control. Now, again, not saying that I want that, not saying that I don't want that. All I'm saying is that, oh, look at the dog. Nice. All I'm saying is that that is the reality. The market tends to perform better when you have a Democrat as a president and then Republican control the House and the Senate. Hey, Tiago Pereira is here. Good to see you. Line Sync is here. Sabrina Ferris says it's 80 degrees in Miami's, folks. 80 degrees. Yeah, it was a beautiful day today, let's just say that. Not too humid, too. Not bad. Charles D says, will ETF become more popular over time than individual stocks? Well, if I'm not mistaken, I think it already is, right? I think the passive investing is already more popular, so to speak, than individual stock picking. Hey, FredX, what's up? Welcome to Miami. Welcome to the 305. Hopefully you guys packed some shorts, t-shirt. I'll quickly show you the entrance to the Epic Hotel. Now, one of the things I notice is every time we walk around Miami, there seems to be nice cars, nice cars everywhere. And I think the reason for that is because it's perfect weather here almost every day. I mean, if you were driving a Ferrari or Rolls Royce every day in New York, I don't know how that's gonna happen if you have potholes everywhere, and more importantly, if you have, rain and sleet and snow and road salt everywhere, very corrosive. So I think that's probably why in general you see better or nicer cars here, just because there's no corrosive salt on the road. Eric's is good pavement. Yeah, that's true. That's true. I did notice that about Miami. The roads tend to be, I would say, a little bit better, maybe a little bit better maintained. However, right here outside of the Aston Martin building, this is a pretty big disaster here. Charles D says, Tom, among retail or commercial investors or both? I think both. I think both. However, I will say this. Now, active investing has gotten a lot of, if you talk to the Bogleites, right? I always like to call them Bogleites. And I guess in some way, I am a Boglehead or a Bogleite myself. My retirement account, I would say almost 100%. I would say, okay, if I'm being honest, 97%, all right? 3 percentage points, whatever it is all indexed to the S&P 500 in a retirement account, right? Which it grows tax deferred until I retire. That's all in the S&P 500, and I don't even look at it. I don't even know how much is in there. Well, I do know how much roughly is in there, but there's probably about 30% less in there now than there was this time last year. But good thing I don't plan on retiring until I'm well into my 80s. I do have to stick up for active investing, though. I do have to stick up for active investing because it's important, and I think it's more important than a lot of people think. And you hear all the statistics that 90% of mutual fund managers, 90% of hedge fund managers do not beat the S&P 500, which is true. However, there are money managers out there and individual investors out there that do generate a significant amount of alpha and outperform, right? So Peter Lynch, one of the greatest mutual fund managers of all time, in his book, One Up on Wall Street, he says, if you only buy the index, you'll never have an opportunity to beat it. So I think it's wise to, index in and dollar cost average into the S&P 500. That's great. But I think if you want to get serious about investing and you understand the core competencies of investing, you have an opportunity to make a lot of money, right? And from an activist investor's standpoint, you know, if you buy a large enough portion of the business, you can get board seats and you can influence decisions in a company. And I think that's also very important. And I'll refer to a particular interview that I watched not too long ago with Carl Icahn. And one of the things he says is, look, a lot of CEOs at a lot of big companies, they tend to get lazy sometimes. They're making a ton of money, you know, they're already multimillionaires. So a lot of that spark, that fire in their belly sort of goes out. They're like, look, I'm making $15-16 million a year. You know, do I really need to push my guys and my team and my girls, whatever you want to call it, to innovate? Now, I'd say that's probably a very small portion, but it does happen. And I think if you are an activist investor, if you're a hedge fund or something like that, and you have expertise, and you look at a business and you say, look, I think this business could be more profitable. I think they could be making better products and services. I think they could be increasing their operational efficiencies if they do this, this, and this. I think that has value. But yeah, to your point, I mean, passive investing has pretty much taken over. So we're looking at the beautiful City National Bank building, the Miami Tower, which is also right across the street from the Hyatt Regency, which is another really, really nice hotel here. Yeah, Chad, that's a good point. So Chad is like, the roads are good because no road salt. It's true. Yeah, Eric says another Lynchism. Those who turn over the most stones win. Hey, Raul says, have a good night, everybody. Got to get some rest for the drive. Take it easy and thank you for joining. We'll see you next time. Big Talk is here. What's up? Mimi says, hey, Tom, love the palm trees. I love them too. Julia M says, I bought my first ETF. It was a bit scary. Bought energy sector. My 401k is low in energy, so I needed to diversify. Very cool. Check out the moon we have here over Miami. Brandon, this is my home, Miami. Good to see you. So I just really want to cover some earnings really quick, everybody. And I'm going to give you guys another quote. Okay. Now, I'm not sure who said this. Maybe it was me. Maybe it was somebody else. I don't know. So I don't want to take credit for it. But I tweeted this out earlier today. So if you guys want to follow me on Twitter, you could follow @WalksWallStreet. So I tweeted this out. Here was the tweet. The tweet was, in a bear market, stocks don't need a reason to go down. They just do. So there was a study that was done by William J. O'Neill. And William J. O'Neill is the founder of Investors Business Daily. And what he found, we'll wait till these guys go past. And essentially, so also if you look in the distance here, this is the Bank of America Tower. Just like if you notice in the New York streams, we always walk past 42nd Street. Right near Times Square there, adjacent from Bryant Park. That is New York's Bank of America Tower. This is ours here in Miami. So back in the day, the founder of Investors Business Daily did a study. And the data shows that 7 out of 10 stocks will follow the trajectory of the overall market. So what do I mean by that? Well, if you just take a broad indice, like let's just use the S&P 500. I think a lot of people has heard about that, obviously. When the S&P 500 is in a bull market, pretty much about 70% of stocks will rise with the tide. However, in a bear market, about 70% of stocks tend to follow the overall trajectory of the overall market. So I think a lot of people here that are trying to dive in and buy stocks or individual stocks when the market is in a screaming downtrend, the odds are automatically stacked against you. However, if you look at some of the sectors in the market that have been performing well, you know, if you were invested in energy for the past year, you probably did good. You know, I think the energy trade is personally getting a little bit long in the tooth. But if you think about energy, things like that, like ExxonMobil, Marathon Petroleum, you know, not for nothing, even some of the offshore drillers were actually getting a pretty good bid. Then you did well. But I think a lot of people that are trying to bottom fish here and catch a falling knife and buy Google and buy Amazon on the way down, I think that is a very, very risky thing to do, and there's no guarantee that the leaders of the past will be the leaders of the new future bull market. Really quick, so this is where we were walking before, right on the Miami Riverwalk. You'll see those 3 big boats, and you can have a more clear look of the Aston Martin building right here. And supposedly, when this is completely finished, it's going to glow bright white, which is going to be insane. Really, really nice. Because if I could give people some homework here, look at the top 10 stocks that made up the S&P 500 15 years ago, and look at the top 10 stocks that make up the S&P today, right? So even though you may be thinking, oh my God, Amazon, I mean, how could, you know, Amazon not always be the leader? How could Apple not always be the leader? How could Facebook not always be the leader? Well, Facebook is down, I think, 80% now, and there's no guarantee it comes back. It could come back, right? But there's no guarantee. And I think you shouldn't be married to any stock. Now, I think we talked about this, I believe it was in the 80s or leading up to the 80s. The best performing stock, I think it went up something like 14,000%, was the Tandy Corporation. Now, I'm not sure if anybody remembers Tandy. I think we talked about this once before on the stream. Tandy turned into Radio Shack, and, well, where's Radio Shack today? Not in business. So it's not crazy to think that there could be a company that comes in and disrupts Amazon. There could be a company that comes in and disrupts Meta or Alphabet. And sort of the last thing I'll say is this, and as I was reflecting on Meta's earnings report, I took some time this weekend to sort of really, really think about this earnings season so far. Real quick, this is the W Hotel and Residences. So if you go right in here, people actually own condominiums here. Beautiful views of the entire city of Miami, but it's also a really, really nice hotel. And you're looking at the beautiful Aston Martin building, and you could see just a little bit of the City National Bank, which is Miami Tower. So I was doing sort of like a post-analysis of this earnings season, and I want to tell you guys what I've sort of concluded about Meta. And this goes into what we were just talking about, that companies get disrupted. If you look at every single company literally throughout the beginning of time, they have been disrupted in one way, shape, or form. So Meta dropped about 25% after hours, after earnings, getting hammered, getting clocked, okay? And one of the main reasons why Meta fell so much is because their capital expenditures were blowing off through the roof, okay? Now, the CFO came on the earnings call and said something to the effect that it's a big possibility that they could be spending about $101 billion next year on innovating in AI, building additional data centers. So I'm thinking about this. I'm like, Mark Zuckerberg is not a stupid guy. I think we could all agree with that, right? He's an Ivy League educated guy. super smart, probably one of the best entrepreneurs of our time. He's probably worried and sees the writing on the wall. Let me just cross here. He's probably worried and sees the writing on the wall that, look, our business model has a very, very, I would say, a large probability of getting disrupted. So we need to get ahead of that and throw all the manpower we have, all the money we have at innovating and creating a new solution. Now, why do you think he's going so far into the metaverse? Now, the metaverse, you may be thinking, well, Tom, the metaverse is stupid. Well, maybe it is stupid, but here's the thing, maybe it's not. And if somebody's gonna invest a ton of money into the metaverse, it's gonna be somebody else, or it's gonna be Mark Zuckerberg. So Facebook has a ton of cash, or Meta, excuse me, has a ton of cash. They generate a ton of free cash flow. And it hit me, I'm like, well, if you have the smartest people in the world, the most bulldogish entrepreneurs in the world saying we have to spend $101 billion to try to outrun our competition, well, it sort of just reinforces the point that nothing is guaranteed, right? Amazon is not guaranteed to have a top 10 spot in the S&P, right? Apple, is the #1 market cap in the S&P 500. That's not even guaranteed, right? So I don't know, interesting thing to think about. I would love to know your thoughts on that. Okay, so adventures in modern recording says the metaverse will prevail. So adventures in modern recording, do you have the, what is it called now? The Quest headset, I think they're coming out with? Has anybody tried that or plan to purchase the new Quest headset? Julia M says, how do we know, Tom, what will be the new frontier, or what the new frontier will look like? I used to be able to predict the disruptors, but it's hard now. Yeah, I mean, that's the thing. It's definitely really hard. And I think that's why you always have stocks moving in and out of these major indices. So maybe, is the research and development spending warranted, right? Because if you think about it, the #1 thing the CFO of Meta said is we're spending so much money to bring on new data center capacity because the chipsets and the servers that we buy, even though it's going to cost a lot of money in the short term, hopefully we'll be able to drive our operating expenses down in the longer term because we own all of our own infrastructure. I don't know, it's possible. Wow, I don't think we've ever seen inside the lobby before, have we? Wow, check out how crazy this looks inside the W Hotel. And again, this isn't a statement to say go buy Meta, right? It's just to say I think we need to be open to the idea that nothing is guaranteed. Yeah, Alligator says it looks like Flintstone Mega Mansion. It's true. Adventures says I have a Samsung headset. Hardware still needs to catch up. So Mark Zuckerberg purchased the Oculus off of Palmer Luckey Palmer. So here, if you see all the way in the distance, this is Brickell Key, and this is the Mandarin Oriental building, which is a beautiful 5-star hotel. It's also in the Deutsche Bank Towers here in New York. Troy Atman says the Quest glasses will be the next cell phone. It's only a matter of time. Yeah, you could be right. Definitely could be right. Billy says, hey Tom, there was a really good interview on Lex Friedman's podcast that talked about AI. Feel free to drop it in the chat, Billy. I would love to check that out. But if you guys are enjoying the live stream so far, feel free to leave a like on the video and hit the subscribe button if you're new. We tend to do these streams about 5 days per week between New York City and Miami as we discuss the financial markets, and we'd love to have you guys here along for the ride. Hey, Mag says I'm in Miami. Welcome. Thank you so much for the warm welcome. I appreciate it. Dr. Longus says, hey Tom, do you think that Facebook will eventually turn into MySpace because people are gravitating to other things such as Instagram, etc.? So I think Facebook is a platform, probably, if they don't innovate. Now, I think we all know that Meta, the company, they own Facebook, they own Instagram. I think that was a good acquisition by Zuckerberg to do that. But again, like you said, there's no guarantee. Like everybody back in the day, I wasn't quite old enough for this, but I'm assuming everybody back in the day had a MySpace page, right? Well, nobody really does that anymore. You know, everybody back in the day used to get music off of like LimeWire and FrostWire. Anybody remember those two websites? Or Pirate Bay? Nobody does that. Two particular companies reported earnings today I want to quickly talk about. And I also want to talk about not necessarily the earnings themselves, but more so the reaction to earnings. So an Australian software company that goes by the name of Atlassian, ticker symbol TEAM, the co-founder, CEO, Michael Cannon-Brookes, Atlassian got clocked after hours. Talk about a total bloodbath, down 20%. 20%. Twilio, another company. This is a pretty good coffee shop. It's called Panther Coffee. I'm not sure if anybody's had it. Very good coffee shop here. But Twilio, it's sort of like an SMS messaging platform. I think also down about 20% after hours. Now here's the interesting thing. I think the reaction to earnings was due to the fact that we just heard from the Federal Reserve and Fed Chairman Jerome Powell for the fourth consecutive time raised interest rates 75 basis points. But not only that, Fed Chairman Jerome Powell said, and I quote, and I think I wrote this down because I think it's just so important. So this is what came out of Fed Chair Jerome Powell's mouth. He said, it is very premature to be thinking about pausing. We think we have a long, long ways to go. So in an environment of rising rates, the stocks that tend to perform the worst are a lot of these money-losing tech stocks, such as Atlassian, right? Now, I think Atlassian's a great company. I talk very, very highly of them all the time. And in 2020 and 2021, Atlassian was my single biggest gainer in my portfolio. But this sort of goes back to the saying that you should never really fall in love and get married to a stock. The fundamentals could be the best. It could have the best management. It could have the best product. But at the end of the day, you need to invest based upon your interest rate environment. And I think now Atlassian may be down 70%. And if you're actively managing a portfolio of stocks, you cannot afford to take 70% drawdowns. You got to know when to sell these things. So I tweeted today actually. I said, if I had built a huge position in Atlassian, but I was still in my college days, like when I was a freshman in college, when I really started to get into investing, I would have done a complete round trip on that trade, and I would have probably been at maybe up fractionally or a break even now. But instead I didn't do that, and I made quite a bit of pretty good return on that investment. And it's just over time you start to learn the proper way to do things. But Atlassian down big. The thing that was concerning me the most about their earnings report is the crazy amount of margin compression. So their expenses are going way up. Their gross margins are getting compressed. And I wasn't on the earnings call because I was busy doing other things, but maybe we'll go into it a little bit deeper tomorrow. They're starting to see a big macro slowdown, and more along the lines of customers that are currently on a free subscription plan the conversion rates to paid are dropping significantly, which is not good. And I think that's pretty much the sign of the times there. Hey, Mr. Farva 85 says, hey Tom, I like blue chips with zero debt and 1 billion in the bank. Lencho Williams is, you either in line with the current system of garbage that is in place or you don't. Your other option is to start fresh. What is possible? All right, let's cross here and let's head to Brickell. So if we continue down this road, this is what's considered the Wall Street of Miami. Right here we have the Merrill Lynch building, Bank of America Tower. Hey, Allison Williams says, good night, Tom, from the Bahamas. Good to see you. Thanks for being here. So this is Brickell Avenue. We will cross and then we will be in Mary Brickell Village. Dr. Longus says, I hear nothing but gloom and doom about the economy, but I'm still optimistic. Does that make me a fool or blissfully ignorant? You know, I think that, and we've sort of talked about this before, but in my view, it's almost as if things are getting back to normal. And that may sound crazy, but it's not normal, the environment we were in. And I think many people, if you bought a house in the 80s or in the 90s, I'll just ask you, what was your 30-year fixed rate mortgage back then when you maybe first bought your house, right? Where were interest rates then? So I think you have a lot of new people that are very young, that haven't really studied history that much, that think a normal environment is artificially suppressed rates and a bunch of money printing. That's actually not normal. So I think this is actually getting back to normal. It's taking out a lot of the speculative excess from the market. Because at the end of the day, the environment of the Federal Reserve expanding the balance sheet to the tune of trillions of dollars a year and keeping interest rates artificially suppressed, that's actually not normal. So could the economy and could the market survive in a higher interest rate environment? I think it can. But, you're going to see valuations adjust accordingly, but life is still going to go on, right? We're going to go through a huge period of depressed asset prices, probably a prolonged period of a very strong US dollar. But I think you could still function in that environment. What can't function is a lot of these, SaaS companies that are predicated on cheap money. Hey, Marketing Videography, good to see you. Welcome back to Miami, Florida. It's a beautiful night here, by the way. Hey, Roberta is here, says Tom, 1996, 8.5%. Was happy to get a mortgage rate. We're fluctuating wildly over 10%. Wow, crazy. Hey, DJ Reviews in Under 2 says, hey Tom, I'm watching from Southeast Georgia. Miami looks beautiful tonight. I went down to the Fine Arts College down there years ago. You got to come back. I mean, we're about to walk into what they call is the mini Manhattan. Things have changed here. Things have changed. Maybe tomorrow night on the live stream, we're going to take a look at the groundbreaking site of the one and only Waldorf Astoria building. It's supposed to be 1,000 feet tall. Now, so let's talk about how, now that we're talking about interest rates, I think it's appropriate to talk about housing, right? And the reality is housing and real estate prices are going to come down. Okay. That's my opinion. You know, is that a guarantee? No, but it's my opinion. But I mean, you just got to do the simple math. Metro mover right there. If you're a first-time home buyer and your budget was $450,000 at a 3% to 3.5% rate is what you were doing your budget as, and I actually advise against that, but I'll sort of go into that later. Your budget is now drastically different now that debt has gone up over 100%. So you essentially have probably, just throw a random number out there, 40% of those people are totally priced out of the market. So, I mean, what you're going to see, and we're already starting to see this. We had data from the National Association of Realtors. We've been covering this every single month on the stream. Every single month, you have existing home sales decline. Last week, we heard from the Census Bureau that said that new home sales cratered and fell off a cliff. So you're seeing this like steady decline, right, in sales volume, transaction activity. Now, if you have transaction volume drying up, well, people that are trying to sell their homes, apartments, condos are gonna be like, well, my home isn't moving, my home isn't selling. They're gonna talk to their realtor and they're gonna be like, oh, well, we gotta drop the price. And then that's when you get the price cuts. But it takes time, right? We talked about liquidity on the channel before, right? I always like to say, think back to your Finance 101 class in college when the professor is discussing a balance sheet and he's like, okay, the balance sheet is in order of liquidity, right? In order of liquidity. So you have, you know, your cash and equivalents, you have your marketable securities, and then as you go down the list on the balance sheet, you hit like property, plant, and equipment. Those things have value, but they're less liquid. It takes a longer amount of time to convert, you know, a factory into cash, right? It's less liquid. So I think you're gonna see those prices coming down. When we were doing our streams in New York City, I told you guys, I think we dedicated an entire stream to this. Left and right, I'm getting emails from Zillow. 1 bedroom, 1 bathroom apartment in New York, $25,000 price reduction, $50,000 price reduction, $60,000 price reduction. Things are gonna come down, you know, but you're not gonna see it right away. It's gonna take a couple quarters. And that's why I think once we hit probably later Q1, early Q2, that's when we're really gonna see it in my view. Hey, QBiz, as I heard Metro Mover will be extended to South Beach in a few years. Man, that would be a blessing, because if that happens, that means we could do more South Beach streams. Hey, Cindy Foley says, good night, everybody, be safe. Thank you for the Miami stream. It's been beautiful. Thank you, Cindy. I appreciate that. Hey, Marketing Videography says, remember selling... Oop, I lost your comment there. My chat glitched out. That's a good point. Somebody says, yeah, and also a gallon of milk didn't cost $8 in the 80s. That's true. And also a starter home didn't cost 500 grand in the 80s. That's a good point. Hey, FredX, what's up, man? Good to see you. Tish TV says, good evening, Tom and everybody. Thank you, Tish TV. Now, I'm not sure if you guys could hear that, but I think they're playing Christmas music in the Brickell City Center. So for those of you who are new to the Miami streams, this is like an indoor-outdoor mall here in Miami. It's pretty unique, so you can see the ground floor, but it's also a big shopping mall here too. Jonathan Francis car loans were 18% in the 80s. Yeah. Well, I think they may get there this time. So this is Brickell City Center. And so I work out of this office sometimes, maybe a couple days a week. This is the WeWork building. Also, you have big consulting firm KPMG. Hey, Rob is here from Toronto. What's up, Rob? Always a pleasure to see you. Thanks for being here. Hey, Deborah says I'm late, but I guess I missed the talk about the 75 basis point hike. Yeah, so we did cover it. So it's the fourth consecutive 75 basis point rate hike at the Federal Reserve. And they did signal a possibility for a 50 basis point rate hike in December. Now, many people thought that was going to be a soft pivot. But if you listen to the entire speech, I think Fed Chair Jerome Powell actually came off to be more hawkish than normal. And the reason for that is because he said, even though we may slow the pace of interest rates in terms of the trajectory, whether that's a 75 basis point rate hike, a 50 basis point rate hike, or a 25 basis point rate hike, rates are actually probably going to need to go higher than we originally had projected in 2023. So it doesn't really matter the pace at which the rates go up. The Federal Reserve essentially told everybody rates are going materially higher. And that's off the back of a white hot labor market, wage gains. And that's another important topic that we covered today, which is tomorrow we're getting the non-farm payrolls. And the Federal Reserve is going to be looking at that really, really closely. I think that's going to be probably the number one thing the Fed is going to look at is the non-farm payrolls report, because we are going to get the updated unemployment rate reading. So right now, the unemployment rate in the United States is 3.5%. It's actually down from 3.7. But the issue is this. If we have a hotter than expected non-farm payrolls, which I hope we don't, the Fed is probably going to even be more aggressive at the next meeting, which is in December. So speaking of the Apple Store, here it is right here in the Brickell City Center. Double Eagle says he effectively said a soft landing was much less likely and that the economy will have to feel the pain to tame inflation. Yeah, and I think that's being honest, right? I think that's being honest. Now, I think the main criticism that I have with Fed Chair Jerome Powell is he didn't raise rates fast enough, early enough. You know, they sort of tried to, placate and pander, saying that inflation was transitory, but we all knew that that was fraudulent. Wow, check out the dog in front of us. Beautiful animal there. So here's some unfortunate news, but it may help with the, bringing down the, or it may help with raising the unemployment rate. And that is, we have huge, unfortunately, I would say, some news coming out of some big tech companies. So Lyft, Stripe, and Amazon all announcing either hiring freezes or pretty big layoffs. And it's interesting that they're starting to announce this now, that the Federal Reserve is coming out here and saying we're going to keep rates higher for much longer. So Lyft came out today and said it's going to lay off about 13% of its workforce, or about 700 total employees. Stripe said it will lay off about 14% of its workforce, and the CEO actually put out a statement saying that we have to reduce our labor force by at least 14% due to stubbornly high inflation, energy shocks, and high interest rates. And again, Stripe is one of those tech companies that is very, very reliant on high rates. So these are my two favorite buildings here in Brickell. And this is right outside of the Lucid Motors store. Yeah, Jonathan Francis Twitter also. I mean, supposedly they're going to lay off about 50% of the workforce, but I don't know if that's confirmed yet. Eric says the best question was on if inflation is being entrenched, which it is. Doesn't matter what rates are, not fixing that fixed inflation. Yeah, I mean, I think the biggest thing is, look, rates will do a little bit to bring inflation down, right? Because the theory there is if money is expensive, it deters people from taking on a lot of debt. It deters people from spending in the economy, which will slow things down. But it's really all about money velocity, in my opinion. And money velocity is the rate at which cash moves through an economy. And we are just coming off a pandemic where the government thought it would be a good idea, or the Federal Reserve, I think along with the fiscal side of the house too, thought it would be a very good idea to print trillions of dollars and send stimulus checks to everybody, and think that doesn't have any ramifications, but it definitely does. So if you really wanted to kill inflation, you need to reduce the money supply, and I don't think that's going to happen. Yeah, John says go to any store and you will see the parking lot full. People are spending money big time. Yeah, I've been seeing that too. And I think we sort of talked about maybe some reasons why. And I think it's because we have a very lopsided economy, right? I think the people who are out spending money, in my view, tend to be more along the lines of the wealthier individuals. And we talked about the story that I told of, my neighbor who works at Tiffany, the jewelry store. He's a big VP there. And we also talked about LVMH's earnings report when it was very, very good. So I think all of this, a decade long of money printing, quantitative easing, has created almost like a two-tier society where you have the extreme haves and extreme have-nots. Michael Joseph says you could cool off the stock market and the money supply and velocity will go down. Well, it's definitely cooling off. I mean, the NASDAQ, here's an interesting thing, sort of to piggyback off of your comment. This is another beautiful building here in Brickell. Did anybody notice that the only major indice during this big bear market rally not to break above the 50-day moving average was the NASDAQ? Anybody notice that? So you had the Dow Jones Industrial Average and you had the S&P 500 all breaking above the 50-day except the NASDAQ. And I think that's probably because rates are going up, right? And a lot of these tech companies do not fare well with high interest rates. And if you look back at previous bear markets, I always like to refer to, obviously 2020 being the most recent, but if you look at 2018, and if you also look at, I would say 2014, 2015, the major stock market index that led the rally was the NASDAQ. And I think until those stocks get in gear, I think it's very, very hard for this market to turn. So look, I still believe that just don't fight the Fed, right? Listen to Stanley Druckenmiller, Paul Tudor Jones, Ray Dalio. All of them say if we're in a quantitative tightening cycle, it's not the best time to be adding a huge amount of risk. So this is Moxie's, which is always a pretty packed place. Doesn't matter if it's Monday through Friday or the weekend, it's always pretty packed here. Hey, Wendy England, good to see you. Yeah, Roberts is not seeing too many IPOs either. That's a good point. And I think that's one of the reasons why a lot of these big investment banks had severely declined earnings. Man, look at the clouds in contrast to the buildings. Amazing. And the crazy thing is, a lot of these buildings went up only about 8 years ago. Some even earlier than that. Solid says, you went to Miami by plane? I did. Yeah, I don't really drive, ever. But yeah, I mean, it's only a 2.5 hour flight, so I might as well fly. Flight tickets usually under $100, depending on the time of year. Michael Joseph says corporate bonds may be the next to drop like a rock. Yeah, I mean, it's definitely possible. Now, here's my biggest concern, and I think we've sort of talked about what I call a black swan event. And I've been sort of pounding the table about this for a long time, but maybe I'm wrong because nothing has really come of it. Now, I want everybody to look at the Chinese commercial paper market. So you could track this by some ETFs. I think some of like the Crane shares funds track the Chinese commercial paper market. But I mean, look where we were in 2020. We are significantly below the 2020 COVID low in the Chinese commercial paper market. So if you think liquidity was totally frozen then, I mean, where do we think it is now? I mean, that is a total disaster. Now, I don't know if the market just doesn't care about it because they think the Chinese government and the CCP is going to bail everything out and it'll be fine. I honestly don't know. It's possible, but I think that is the number one biggest risk if we have the Chinese commercial paper market blow up. Or I should say, if you have a reaction to that. Now, maybe we already had that reaction because if you look at the Chinese stock market, like the HSI, I mean, it's trading at levels where it hasn't traded since the 90s. A lot of these Chinese stocks are getting hammered. Alibaba's, I think, all the way back to its IPO price. JD. Hey, Qbiz, this is Tom. What airline do you normally use? I've been flying American Airlines almost every time now. I don't know, I think American's pretty good. What sort of airline do you guys fly all the time? Roberts is New York City to Miami, $72 round trip on Frontier Airlines. Hey, August Ice, good to see you. So these are my two favorite buildings here in Brickell. Now, this is Mary Brickell Village, and this sort of big, well, complex here, supposedly they are going to tear down this entire thing and build a super tall. So right where you see this big steakhouse, this restaurant right here, supposedly they're going to tear the entire thing down and build one of these. Yes, Zozo Bob's is the SLX Lux Tower. Hey Reed, this is Southwest and JetBlue. Yeah, I tend to fly American. You know, it's weird. Sometimes, for whatever reason, American Airlines have been having better prices. I don't know why. Hey, Chris Beeman, what's up? This is nice to see everybody in short sleeve shirts. It was 80 degrees today. 80 degrees, bright sunshine. Now, this is a brand new building they just built. This one's really cool. I've eaten here before, it's pretty good, but I'll take you guys to an Argentine restaurant, which I think is probably the best restaurant down here in Mary Brickell Village. Now the funny thing is, a lot of people are going to be starting to come down to Miami because we are headed into the winter months. And it's what you call the snowbirds. So a lot of people maybe from the Northeast, also Canada, tend to come down here to southern Florida to escape the winter. And anybody who owns maybe a home or a condominium down here, if you rent out your space during that time, it can be pretty lucrative opportunity there. I think I told you guys I rented out my entire place for the month of October. And the guests took great care of the property. Now, I have a new theory. And the theory is this. I think if you're looking to get into, let's just say, an investment property or even, maybe short-term rental in general, it's a lot less work and you tend to find a lot better tenants when you rent out your property for 30 days or more. In my case, when I started to do Airbnb and rent out the individual rooms, people would stay maybe for 3 or 4 days and then they would leave, and it was very transient, so it was very hard to clean. But you could charge, upwards of $3,000 to $3,500 a month for somebody to rent a single family home, 3-bedroom, 2-bathroom. A lot less work, and you tend to attract a lot of families that have kids that don't want to stay in a hotel. Yeah, Michael Joseph says you couldn't figure out the cleaning schedule. Also, on a profitability standpoint, it's actually more profitable to rent it out for an entire month. And it tends to attract a better type of tenant. So for example, the person, I would say the family who rented out my house for the entire month, they were allocated, I think, 30 days to work wherever they wanted. So instead of cramming your entire family in a hotel, which hotels are nice. If you have little kids, they could each have their own bedroom. They could each have their own bathroom. They could run around in the backyard. They could run around in the front yard. And you could also park your car in the driveway and just have more space. I don't know, in a hotel, I don't know if you would want to take a vacation for 30 days in just one hotel room. So this is my favorite restaurant here in Brickell. It's an Argentine restaurant. Now, if you are here visiting or you want to take clients out to eat, I would highly, highly recommend this one. Deep Value Alex says, how was the Airbnb experience? What kind of issues did you come across? So to be honest, I didn't come across any issues. And again, the reason why I think I didn't come across any issues is because I'm trying to mitigate my risk as much as possible. I've noticed, right, and not to sort of super generalize, it's almost the same thing in tech sales, right? The customer that I'm negotiating a $5,000 deal is going to be the same amount of time and effort than as if I negotiate a multi-million-dollar deal and the client has to put 30% down on a $15 million deal. It tends to take the same amount of effort. And those customers tend to complain a lot less. It's very strange. I don't know why, but anyway. When you have a family, they have very stable jobs and they just want a place to stay, they tend to take care of the property better than, maybe some teenagers that want to rent your house in Miami for a weekend and throw a party and everybody's doing drugs. I don't know. Again, super anecdotal data here, but I've been trying to frame it that way. But so far, so good. Joseph Hardaway's like 30 days. I rent a penthouse. Yeah, you could. I think you can. Michael Joseph says, so you vetted people well? I didn't really even vet them. I think it was just the moment I put it up for 30 days, they booked automatically. And they asked me some questions about the noise on the block because they have kids. I'm like, no, we live in a very, very, very tame type of place. Anyway, so this is the view of the main towers here, Brickell City Center. One of my favorite views. Hey, Teresa Diaz, good to see you. Welcome. Rob says, I don't see any homeless. Yeah, so Rob, Miami is very, very different to New York. Now, Miami, we do have a homeless problem. I'm not gonna lie. I'm not gonna say there's none, but it's not coming from New York and experiencing New York City. It's almost like not even noticeable at all. And Miami tends to be a little bit more clean, more cleanly. I'd say, especially on the sidewalk. You notice you don't really see any garbage on the sidewalks or anything like that. Now, not a knock against New York. I love New York. It's the best city in the world, but I'm just making an observation here. Miami keeps it very, very clean. So did anybody see the news that rent prices are finally starting to come down? Anybody see that? Now, it was only a matter of time. And I think we can officially say that the old saying that nothing is different this time is 100% true. Nothing is ever different this time. This is a ramen place. I haven't eaten here, but I definitely want to check it out. But many people, and look, I think we called this pretty well on the stream. I think we did good. Does anybody remember about 6 months ago, we were reading all of these reports that New York City rent breaches $5,000 for the first time. Rents are never coming down. It's always going to be this expensive. And those are the sort of headlines you get once the tides are going to turn. Now, I'm not saying rental prices are going to crater overnight, but they're going to come down. Things are going to get back to normal. And I think prices are going to come down if you're looking to buy. But this is what I like to call the Barron's effect. And I don't really like to pick on Barron's because I think they're a fantastic newspaper. I read them every single weekend. But, oh, here's the Metro Mover coming by. Yeah, here in Miami we have a subway, but it's not underground, it's above ground. Kind of makes it look like a futuristic city. But here's the thing. I think rental prices are going to come down slowly but surely. Because I almost think they have to. And I think prices are going to come down because I almost think they have to. As of recording this video, according to bankrate.com, the average 30-year fixed rate mortgage is about at 7.32%. That's about a 15 basis point increase from the same time 7 days ago. So I wouldn't let your emotions get the best of you. If I was looking to buy right now, I would probably sit on the sidelines, build up some cash, and just chill and see what Q1 and Q2 brings about. Because if I had to bet, like if I had to make a surefire bet on this, I think the homes that you're looking at today are probably going to be material, I'd say, a couple percentage points lower after the new year, Q1 and Q2. Because here's the debate. I'll give you guys a view of the other side of the street. Because the debate is essentially this. Do we think interest rates, and I've been hearing a lot of realtors talk about this too, and not to pick on realtors, I think realtors are great. But I've been hearing a lot of them, especially a lot of prominent ones, saying, do we think interest rates are going to stay at these elevated levels for the next year? And they're like, probably not. And even if it does, still buy the place and you can always refinance later. I think that's a bad way to think about it, not to cause any controversy, but valuations matter, okay? Don't think about the monthly payment. I think that is, in just my opinion, I think that is the most horrible advice you could give somebody, is figure out the monthly payment you could afford and then go acquire the property. I think that is so horrible. Valuation matters, okay? And 90% of the money that's made in real estate is at the buy, and you gotta get a good deal. And you will get a good deal if you're patient and you're a shark. But if you're a novice and you're a pushover, you're gonna get screwed and you're gonna get beaten over the head, all right? So I would just keep your composure, follow what the Fed is doing. I mean, the Fed Chairman Jerome Powell, if he said it once, he said it 1,000 times yesterday. He's like, yes, we may slow the pace at which interest rates are going up. However, we think we may have severely underestimated the trajectory and the length at which rates have to stay elevated. So rates are going to go up, okay? So to give you some context here, the Fed funds rate as of today is at 3.75% to 4%. If we have another 75 basis point rate hike, that means rates are going to be well over 4%. And if we get 2 consecutive 75 basis point rate hikes, well, that means the Fed funds rate by spring is probably going to be over 5%. If that's the case, you know, you could probably see a 10-year U.S. Treasury yield approaching 5% and a 30-year fixed rate mortgage maybe at 10%. I think that's very possible. Hey, Alj, good to see you. Welcome. Tariq Khan, that's interesting. So Tariq says, hey, as we've seen, when people can't afford the high rent due to recession, rent was put on hold. Hey, fourth quarter, what's up? Deep value, Alex, is the Waldorf broke ground. I know, isn't that crazy? So the Waldorf Astoria, 80% of the building sold in pre-construction. So 80% of the entire thing is sold out. That's wild. That's unbelievable. Now, deep value, Alex, I think it's the same thing with the Aston Martin building, right? I think that may be 90% sold out. Hey, Jason Francis is here. Good to see you. We're outside Chipotle, ticker symbol CMG. I'll give you guys one more look at the sky here. You have a beautiful moon over Miami. Wow, that's a really nice shot. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you are new. We do these live streams about 5 days a week between New York City and Miami. Love is Kind says, wow, how nice and clean and beautiful this area is. Thank you so much. Fourth quarter is here. Says, hey, Tom, good to see you. JR says, you make money when buy something, not when you sell it. Yeah, that's true. Make money at the buy. Yeah, Jonathan and Francis killed home sales like Alan Greenspan did. Now, another thing that Fed Chair Jerome Powell said at the meeting is he's like, we don't want to make the mistake of pivoting too early like they did in the 70s, right? And he's always using these almost like 1980s quotes. Have you noticed that? And maybe that's for good reason, because the former Fed chairman in 1980 was Paul Volcker. So maybe that's why he's using those 1980 style quotes, such as keeping at it. We have to keep at it at all costs. So this is the SLX Lux building. Hey, Princess, can't wait. I'll be there next week. Hey, dude, awesome. Can't wait till you're back in Miami. Yeah, Miami is it's a very, very nice break from being in the craziness in New York. Now, I think New York City is the best city on earth, but if I had to pick two places to live, it's New York City and Miami, without any question. It's the quality of life down here, in my view, right? Because I like it hot all year round. I like the humidity. The quality of life is just unmatched here. I wake up, it's beautiful, the sun is out, you feel more energized. The people are really nice too. So Brickell City Center extends all the way down here. Michael Joseph says, does Miami still have crypto fever? I think a lot of that stuff is going to get washed out in my view. Now, I do think that I'm bullish on the industry in general, but I think a lot of the regulators need to come in here and do their jobs. I think there's a lot of nefarious activity going on. Yeah, Dusty Cole. I am a Casey Neistat fan, dude. I love that guy. Wow, deep value, Alex. Tom, only 10% of the Aston Martin building is available. Comes with the car or an SUV. It's insane. Do you know anything about the Bentley building or the Bentley Tower? I'm excited about that too in Sunny Isles Beach. Dr. Longus says, Tom, what do you say about the greatest economist to ever walk the face of the earth, Milton Friedman? I would say I agree with your assessment. I'd say he's fantastic. Now, I have Milton Friedman's book, and if anybody wants to watch a really, really cool YouTube video, watch Fear and Greed by Milton Friedman. Fantastic video. Hey, Tress Boston says downtown looks great versus my Seattle. Seattle's nice. The only issue with Miami, if there's any Long Islanders here, the red lights or the traffic lights are exactly like living on Long Island. 2-hour, 3-hour red lights. Deep value, Alex, did you hear about the 17-acre redevelopment of the downtown area? Complete renovation, and I believe they're currently taking buds for developers. So I did hear the, what's it called? I'm blanking on the name, but it's right outside of my office. They're gonna redo the entire thing, right? Bayfront Tower. I think that's what it's called, Bayfront Tower. Hey, Gene says Brickell City Center is also expanding with the new Super Tall. Yeah, that's gonna be insane. We just walked past that too. I guess they're gonna demolish the entire thing. Lucid Motors building once again. All right, one more shot I'll give you guys of my two favorite buildings here in Brickell. And then we gotta head back to downtown Miami because we've already been streaming for 2 hours. that's even possible. Can't believe that. Tomorrow on the live stream, everybody, we will be walking to Brickell Key. I think you're going to enjoy that very, very much. Brickell Key is a fantastic place. And I think they just fixed the internet over there. So we will be able to do a walk over there. You'll be able to see the Mandarin Oriental Hotel. But I think the biggest thing to watch for tomorrow is those non-farm payrolls. Now, as we do on every live stream before the non-farm payroll numbers, I want to get a guess from the viewers in the chat. So here's what I'll say. Let's preface this with this, and here's how we'll end the night. We covered a lot tonight. We covered a lot. Also, the Institute for Supply Management PMI numbers came out, decelerated again. I would read through that report. So tomorrow is November 4th, Friday, 2022, and the Labor Department is going to release its non-farm payroll report for October. Now, expectations are for about 205,000. So if we had a Walks in Wall Street guess, what do we think is our consensus? If everybody had to guess what the number would be. So I want to guess of the non-farm payrolls and the unemployment rate. So here's what I'll go. I'm saying non-farm payrolls are going to come in at 215,000 above consensus, and I think the unemployment rate is going to stay steady. The LT process, you think 300,000 payrolls added, and the unemployment rate is going to go up to 3.7%. Interesting guess. Interesting guess. You know, maybe we'll take the Metro Mover back. We'll see. This is 59 East 8th Street. Wendy England, good to see you. Love is kind, says Tom. I don't know if you already talked about it, but what are your thoughts on Elon Musk's plans to charge $20 a month for Twitter? I think it's $8 a month. I'm not sure if it's $20 a month. I think Elon Musk wants to charge $8. And I think it's kind of a dumb idea, but I'm not too sure how. Let me say this. I need to look into a lot of the benefits, because if it's just $8 and then I get no benefit, then obviously no. But I think there are some slight benefits to paying the $8, but I'm not sure those benefits are quite worth it. Let's just say that. Yeah, FedEx is like $8 for a blue check. I mean, supposedly you're allowed to post long-form video on the platform and your comments will get priority, but I don't know. Bree Johnson says, of course Elon wants more money. What a surprise. Well, I mean, the business isn't profitable, right? Now, the biggest issues with Twitter and Snapchat, those two social media platforms, is they've done a horrible, horrible job of monetizing. Like, probably the worst job you could do. So I think at the end of the day, not every idea is going to be a good idea. And the good news, and I sort of said this before, but the good news is that Elon is at least running ideas by the public, as opposed to, you know, going to a board of directors or, you know, going to his investors. He's trying to make a conceited effort to say, look, what do we think about this? These are some ideas. And that's what entrepreneurs do, right? I mean, if you think about very, very successful people, they fail a ton, right? That's why I never really understood in politics, specifically when people make fun of the other candidate because they failed at something. Well, let me tell you something. If you're an entrepreneur, you're in business for yourself. There's no one-hit wonders, okay? You try thousands of things that don't work, that don't pan out. It's just a law of probabilities. So not every idea is going to be the brightest idea. So Bree says, is he though, or is he just running his wild ideas? Well, I think it's in his nature to have wild ideas, right? I mean, you have a person. It takes a crazy person with wild ideas to do anything of material value. I mean, you look at, a Steve Jobs, the Bill Gates, Richard Branson, all of these people have wild ideas, right? They're all crazy ideas. But there's a specific type of person that can execute on those crazy ideas. That's why everybody's not a billionaire, right? Everybody doesn't take a ridiculous amount of risk to build a company. But look, I think I sort of explained this before, but right now, it's what I call the fog of war phase with this whole Twitter thing. And for about 3 weeks, here's my prediction. For about 3 weeks, the media is going to have a field day just to generate advertising revenue, right? You're going to have Fox News, CNN, every single tabloid out here publishing like the most egregious stories about how ruthless Elon Musk is, how horrible he is. He's firing everybody. You're going to have a lot of political banter. And then it's just going to die down. So my advice is, don't bite the hook on this. Don't bite the hook. I would just completely tune out the news for 3 weeks, and then that's when you're going to get the facts, and that's when you're going to actually see material change and impact. Right now, bullets are flying all over the place, and I want to stay down in the bunker. I don't want to pick my head up when I have a 50 caliber bullet whizzing by my head. I want to stay down in the bunker and wait for the ammunition to run out. Once the ammunition runs out and the 50 cal stops spraying, I'll pick my head up and I'll assess the situation, and I think everything is going to be fine. I know that was a crazy analogy, but it happens every single time and everything. Once a big breaking news story happens, the media sinks their fangs into it, gets everybody riled up, gets everybody arguing. They're going to, take a little tweet by AOC. She threw a shot at Elon Musk. It was all in a good joke, and they're going to be like, look at how crazy and stupid she is. She said something nasty to a billionaire. It's like, just completely ignore it. It's going to waste your time. It's just complete waste of time. So I think in 3 weeks, maybe we'll revisit it. Yikes, that guy was driving way too fast. Crazy. I know. Yeah, Ryan Roll, that's true. It seems like everybody on Twitter's, talking about it. I just think that these are very opportunistic times. So what you're going to have is figures on the right just trying to post slam dunks on the left, and the left trying to post slam dunks on the right, when it shouldn't even be political. We're talking about Twitter here. But that's just what generates the clicks, unfortunately. You look at CNN, Fox News, their job is not to inform you, right? If you watch CNN or you watch Fox News, the incentivization structure, so I always say this, and then we got to run because I got to get the bus. The incentivization structure is to follow the money. If you obey that one law of follow the money, it will lead you to every answer that you need answered. And the incentivization structure is to drive clicks and drive revenue. And the way to do that is to get